Ever felt like you were just hitting a digital wall, trying to move your crypto assets between different blockchains?
Oh, yeah. It's like having money in, I don't know, Japan and Brazil.
Yeah.
But trying to easily swap it is a nightmare.
Exactly. Well, today we're taking a deep dive into something called Wormhole crypto. It's designed specifically to connect these separate digital worlds.
Yeah, our mission here is really to unpack what Wormhole actually is.
Yeah.
We'll get into how it works, behind the scenes, look at its security, its impact, and even touch on its future, including its native token, W. We're pulling all this from the sources you shared with us.
And what's interesting is it's not just another bridge. It's pitched as a leading cross-chain messaging protocol.
Right. So seamless transfer of assets, yes, but also data between lots of different networks.
And it's already handled, over 1 billion cross-chain messages? That sounds significant, shows scale.
Definitely demonstrates scale and hopefully reliability. So let's dig in.
Okay, so where do we start? The basic problem, I guess.
Yeah, the fundamental issue Wormhole tackles is this fragmentation in the crypto world.
Right, everything's siloed.
Exactly. You get more and more blockchains, which is great for innovation, but assets and dApps on, say, Ethereum can't just naturally talk to things on Solana or Polygon or wherever.
Which makes things complicated for users, and I imagine for developers too.
Hugely complex.
Right.
Adds friction everywhere.
So it's like these amazing digital cities, but no highways connecting them.
That's a great analogy. And Wormhole wants to be that highway system, that communication layer.
You mentioned it's more than just moving tokens, though. Arbitrary data. What does that actually mean in practice? What new stuff does that enable?
Good question. Think bigger than just swaps. Imagine.
Yeah.
A DeFi protocol on Ethereum needing data from an NFT marketplace on Solana to calculate something.
Okay.
Wormhole lets them communicate directly without the user needing to manually bridge assets or even know it's happening across chains.
So seamless integration.
Yeah, or maybe a game on Polygon using an Oracle service running on Avalanche. It allows for these genuinely cross-chain applications, mixing and matching strengths from different networks. It's really foundational stuff for, a more connected Web3.
That really does put it in perspective. Okay, so how does it actually do that? Connecting these different architectures.
Under the hood, it uses this quite sophisticated 5-step message passing system.
5 steps. Okay, walk us through them.
So first step, message emission. An emitter could be you, could be an app, puts data into a Wormhole smart contract on the starting blockchain.
Okay, like dropping a letter in a special cross-chain mailbox on, say, Ethereum.
Exactly like that.
Yeah.
And step 2 is data preparation. The smart contract basically wraps that data up, gets it ready for its journey, seals the envelope, digitally speaking.
Got it. And then the security part kicks in.
Yep. Step 3, validation. This is where Wormhole's network of guardian nodes comes in. They watch the source chain, wait for the transaction to be final, really confirmed, and then they validate the message.
Finality is key there, I guess. No going back.
Absolutely crucial. Once it's validated, you get step 4.
Yeah?
Transmission. The message gets relayed across to the destination blockchain pretty much in real time.
Okay.
And finally, step 5, reception. The user or the application on the other side retrieves that original data from the Wormhole smart contract on the destination chain. Done.
All 5 steps have to happen correctly.
Correct, for the transfer to be successful.
That validation step with the guardian nodes, that sounds like the real heart of the security. Tell us more about that network.
For sure. It's a decentralized network, currently 19 guardian nodes. These aren't just random nodes, they're typically major, reputable staking entities.
And they use a consensus mechanism.
Right, a 2/3 majority consensus.
Right.
So at least 13 out of the 19 guardians have to agree and sign off on any cross-chain message before it's considered valid.
2/3. Okay, why is that specific number important? It seems high.
It is high, deliberately so. It makes it incredibly difficult for an attacker. Think about you'd need to compromise or get 13 independent, geographically distributed, highly secure validators to collude simultaneously.
Right. The coordination required for an attack becomes exponentially harder.
Exactly. So when a message comes through, each guardian independently watches the source chain, verifies the message's authenticity, waits for that finality, and then cryptographically signs it.
And all those signatures together create.
They create what's called a VAA, a verified action approval. It's like a multi-signed digital certificate saying, yes, this event definitely happened on the source chain and it's legitimate.
Okay, so that VAA is the proof that travels across.
Precisely. And our sources also mention other security layers, like the fact that relayers, the entities that actually transmit the VAA, can't tamper with it. It's immutable.
And there's something about preventing double spending.
Yeah, a proof of transfer mechanism basically ensures assets can't be duplicated when they move across chains. It's a multi-layer defense system.
Seems pretty thorough. Okay, so which blockchains does Wormhole actually connect? You mentioned Ethereum and Solana.
Yeah, those are the originals, but it's expanded a lot. Key ones now include Ethereum, Solana, and a big chunk of the Cosmos ecosystem. Think Injective, Osmosis, Evmos, Kujira.
Lots of big names.
Oh, yeah. In total, it supports secure data and asset movement across more than 30 different blockchains. It's built quite a wide network.
30 chains. That's quite a reach. But I read they're actually trimming that list down a bit. Why would they do that?
That's right. They've announced plans to deprecate support for some chains by summer 2025. Chains like the old Terra Classic, Oasis, Aurora, Akala, Karura, Ixbla.
Why? Seems counterintuitive to reduce reach.
Well, it's about strategic focus. They're concentrating resources on the networks with the most activity, the highest security standards, and sort of the biggest potential for growth. It's about optimizing performance and security where it matters most in this, constantly changing ecosystem.
Okay, makes sense. Resource allocation. So, boiling it down, what really makes Wormhole stand out compared to other ways of connecting chains?
Well, a few key things. First, that trustless architecture we talked about. The decentralized guardian network means you're not relying on one central party. That minimizes trust assumptions, which is core to the whole blockchain ethos, right?
Right. Decentralization is key. Less risk of a single point of failure or control.
Exactly. Second, those versatile messaging capabilities. Again, it's not just tokens. Sending arbitrary data allows developers to build much more sophisticated cross-chain apps. Think combining security from one chain with speed from another.
Creating these hybrid apps we discussed earlier.
Precisely. And then there's the industry-validated security. Our sources really highlighted this. Wormhole was apparently the only cross-chain protocol that got unconditional approval from Uniswap's Bridge Assessment Committee.
Uniswap. Wow. Okay, what does unconditional approval mean in that context? That sounds like a big deal.
It is a huge deal. Uniswap is arguably the biggest DX, and their security committee is top tier. Getting their unconditional stamp means Wormhole passed extremely rigorous security audits and scrutiny regarding its architecture and practices. It's a massive vote of confidence from a major player.
Okay, that carries weight. Anything else?
Well, obviously, the comprehensive blockchain support, connecting all those major networks, and importantly, developer-friendly infrastructure. They offer tools, SDKs, basically making it easier for developers to actually build these multi-chain dApps.
And that seems to have paid off. Our sources mentioned something like $100 billion in cross-chain transactions facilitated through apps built using Wormhole by early 2024.
Yeah, the adoption numbers are staggering. Over $100 billion flowing through apps using their tech.
$100 billion. It's thinking back maybe 2 or 3 years ago, trying to move stuff between chains. It was awful, wasn't it? Clunky interfaces, long waits.
Oh, it was painful. Seriously. Multiple steps, confusing UIs, high fees sometimes, and always that worry about security. Seeing Wormhole facilitate over $40 billion in actual transfers by early 2024, with average times under 30 seconds, it's night and day. Really smooth things out.
Huge improvement. Okay, this naturally leads us to the W token. What role does it play in this whole ecosystem?
So W is the governance token for the Wormhole protocol. Holding W gives you a vote on key decisions, upgrades, the future direction of the platform.
Standard governance utility then. What about the specifics, the tokenomics?
Right, the ticker is just WMAX supply is capped at 10 billion tokens. When it launched, the initial circulating supply was 1.8 billion, and it exists natively on both Ethereum as an ERC20 token and on Solana as an SPL token.
So you can use it easily on 2 major chains from the get-go.
Exactly.
Makes it accessible.
And I understand a large chunk, like over 80%, is locked up initially. That sounds like a strategy for long-term stability. Correct. 82% of the total supply was locked at the start, and those tokens unlock gradually, linearly over a 4-year period based on a defined schedule.
Okay, and how's the initial allocation broken down? Who gets what?
It's spread out. The community launch category got 17%, but only 11% of that total supply was unlocked right at the token generation event, the TGE. Ecosystem and incubation got a big slice, 31%, with 5% unlocked at TGE. The foundation treasury holds 23.3%, with just 2% unlocked initially.
And what about the core team, the Guardians, strategic partners?
They have significant allocations too. Core contributors, Guardian nodes, strategic network participants, but crucially, none of their tokens were unlocked at TGE. They're all subject to that multi-year vesting schedule.
So it's definitely geared towards preventing early dumps and aligning everyone for the long haul, a slow release.
Precisely. It's about building trust and managing supply carefully as the protocol decentralizes.
Speaking of decentralization, how does that governance actually work? How does the community use W to steer the ship?
It's a progressive decentralization roadmap. Initially, the on-chain governance, using W votes, will focus on things like community programs and managing the treasury.
Okay, starting smaller.
Yeah. Then, over time, the plan is for the Wormhole DAO, the decentralized autonomous organization run by token holders, to take on more and more responsibility.
Like what kind of decisions?
Big ones. Things like voting on adding or removing support for specific blockchains, approving smart contract upgrades, adjusting protocol fees, deciding whether to expand a guardian set, maybe even tweaking the token's utility itself, gradually shifting power to the community.
It's quite the journey. Let's talk about the journey where Wormhole came from and where it's headed.
It's been quite an evolution. Era 1, roughly 2020-2021, was basically the proof of concept, launching that first token bridge between Ethereum and Solana. Simple, but groundbreaking at the time.
Just getting those two giants talking was a big step.
Absolutely. Then came Era 2, from late 2021 to early 2024. This is where it really transformed from just a bridge into a full platform.
Right, the general message passing protocol.
Exactly. That was the core innovation. Expanding to support over 30 chains, handling that billion-plus messages, tens of billions in value transferred, really scaling up.
So what's happening now? We're in Era 3, the era of experience. What does that mean?
Yeah, Era 3 kicked off in 2024. The focus now is heavily on improving the user experience, the UX UI, making everything smoother, faster.
Likey.
Things like native cross-chain swaps directly through Wormhole, speeding up transfer times even more, enhancing their existing tools like the Portal Bridge interface and Wormhole Connect for developers.
And something for institutions.
Yes, a big push is Wormhole Institutional, tailoring their interoperability solutions for enterprise use cases. That's potentially huge for mainstream adoption.
Okay, interesting. And looking ahead to 2025, Era 4. Sounds like some major tech upgrades are planned.
Definitely. Era 4, slated for 2025, is ambitious. They're talking about industry firsts like multi-gov.
Multi-gov?
Yeah, supposedly the first multi-chain governance solution. Imagine making a governance decision that gets executed automatically and securely across multiple different blockchains simultaneously.
Wow, okay. That solves a big coordination problem for DAOs.
Potentially, yeah. Also planned for 2025, the Wormhole DAO going fully live, something called Wormhole Settlement, and significant upgrades using zero-knowledge proofs.
ZK Tech. That's cutting-edge stuff.
Very much so. They're planning ZK Lite clients specifically for Ethereum, Near, and Aptos. This uses advanced cryptography to verify things securely without revealing all the data, which can boost privacy and scalability.
So the vision is connecting everything, making it faster, more secure, more private. What's the ultimate end game? Era 5 and beyond?
The long-term vision is massive. They want Wormhole to be the fundamental connective tissue, the network of networks, for the whole decentralized economy.
Handling trillions in value.
That's the goal.
Yeah.
Trillions in tokenized assets, value flowing between individuals, institutions, maybe even governments. They talk about becoming the heartbeat of this new on-chain economy and internet.
So for a regular user, the idea is that the underlying chains almost disappear. You just interact with assets and apps seamlessly.
That's the dream. You wouldn't have to worry, is this NFT on Solana or Polygon? You just use it. This could unlock crazy new financial products, truly global digital identities, cross-chain social networks, things that are clumsy or impossible today.
An incredibly ambitious vision, but, with great ambition, and especially in crypto, comes great risk. We have to talk about the downsides, the vulnerabilities.
Absolutely critical to have a balanced view. Cross-chain protocols are complex, and they do carry inherent risks.
The big one that comes to mind is that major hack Wormhole suffered back in 2022, right?
Yes. The 2022 exploit was significant. Over $320 million was lost, although Jump Crypto stepped in to backstop the funds. It was a stark reminder that bridges are prime targets for hackers. Continuous audits, rapid patching, robust security are non-negotiable.
A very expensive lesson learned, hopefully. What other risks are there?
Well, there's always the general risk of smart contract vulnerabilities. Bugs can exist in even well-audited code. We know smart contract exploits cost the industry billions, over $2 billion just in 2024, according to some reports.
So code risk is always present.
Always. Then there's the validator network risk. We talked about the 13 out of 19 threshold being high, but it's not impossible theoretically. If an attacker could compromise or coerce that many guardians, they could potentially approve malicious messages. Highly improbable, but it's the core security assumption.
And Wormhole depends on the chains it connects to.
Yes, underlying blockchain risks. Wormhole security is partially reliant on the security of chains like Ethereum, Solana, etc. If one of those chains suffered a major attack, like a 51% attack, where someone controls the majority of the network's hash power,
That could potentially compromise messages originating from or going to that chain via Wormhole.
it could certainly cause problems or allow for invalid messages under certain extreme conditions. Then you have more operational risks, like network congestion and timing issues. Different chains have different block times and confirmation speeds. High traffic can cause delays or potential timeouts in cross-chain transactions.
And the elephant in the room for all crypto: regulation.
Always. Regulatory uncertainty. Rules change, different countries have different approaches. A shifting regulatory landscape could definitely impact Wormhole's operations or user adoption.
Plus, they're not alone in this space, are they?
Not at all. Intense competition. You've got major players like Layer 0, HODLer, Chainlink with its CCIP. They all want to be the dominant interoperability solution. Wormhole needs to keep innovating to stay ahead.
Although that projected market growth is huge, $16.5 billion in 2024 to $40 billion by 2027. Lots of pie to fight for.
Exactly. Massive potential, but fierce competition. There's also the theoretical risk of just decreased demand if, say, blockchain innovation slows down or the market consolidates significantly, though that seems unlikely right now given the trends.
Okay, a lot to consider on the risk side. Let's circle back to the W token itself. What's the market saying right now? Price, sentiment.
Okay, so as of today, July 16th, 2025, the W price is hovering around 0.0869. The sources we looked at reported a short-term bearish sentiment, actually suggesting a potential drop of maybe close to 20% in the near future.
Short-term bearish. And the market cap?
Around $401.84 million currently, with about 4.67 billion W tokens reported to be in circulation.
Okay, that's the snapshot today. What about longer-term price predictions? Keeping in mind these are always speculative.
Highly speculative, absolutely. But the data we have, mainly from Changelly, which seem to align quite closely with BitTrue for these periods, paints a very optimistic long-term picture.
How optimistic?
Well, by the end of this year, 2025, they're projecting an average price around $1.97. That would be, 129% ROI from today's price.
Okay.
By the end of 2026, the average prediction climbs to $2.78, with a potential max price of $3.32. That's looking at a 235% ROI.
And it continues upward from there in the following years.
According to these predictions, yes.
Yeah.
End of 2027, average $4.16, max $4.67, potential 371% ROI. End of 2028, average $5.87, max $6.93, looking at nearly 600% ROI.
Wow, those are some steep climbs. And I saw some crazy numbers way out, like 2050.
Yeah, those are, well, let's call them highly ambitious projections. Some models show average prices nearing $900 by 2050. You take those with a huge grain of salt, obviously.
Several factors. Number one is clearly adoption by developers and projects. The more dApps actually use Wormhole for their cross-chain needs, the more demand and utility that the W token potentially has, especially as governance becomes more active. Makes sense. Usage drives value.
Second, tokenomics and staking mechanisms. Right now, W is mainly for governance. If they introduce staking rewards where you can earn yield for locking up W, or slashing penalties for bad actors, or maybe even token burns that reduce supply, those could significantly impact price.
Any changes to how the token itself works?
Exactly. Third, that competition we talked about. How well does Wormhole differentiate itself? Does it become the go-to for speed, security, cost? Its competitive positioning against Layer 0, HODLer, etc. will be crucial.
And finally, the broader market.
Always. Market trends and regulation. A bull market lifts all boats, a bear market sinks them. Major regulatory shifts, good or bad, will also play a huge role. Macroeconomic factors too.
So bottom line, even with a solid project and institutional nods like Uniswap's approval or BlackRock exploring tokenized assets which might use protocols like Wormhole, it's still crypto, still risky.
Absolutely. Disclaimer time. Wormhole has a clear use case, strong tech, and significant backing. But like any crypto investment, it carries substantial risks. Market volatility is intense, competition is fierce. You absolutely must do your own research, understand the risks, and only invest what you can afford to lose.
Sound advice. Well, we've certainly covered a lot of ground today on Wormhole, really dug into how it works, the security, the big roadmap, and the W token.
Yeah, it's clear they have ambitions to be a really foundational piece of Web3 infrastructure. Getting assets and data to move seamlessly isn't just nice to have. It feels essential if this tech is going to go mainstream, moving beyond isolated islands into a connected network.
It really does. So maybe a final thought for you, our listener, to ponder. As we head towards this future where assets and data might just flow freely across chains, where maybe you don't even think about which chain you're on, what completely new kinds of applications could emerge?
Yeah, what happens when that friction disappears? What unexpected innovations could a protocol like Wormhole unlock if it really does become that heartbeat of the new on-chain economy they envision? Something to think about.